Sousa's event,
Our
Finance
event.
Club event
Fine.
with the Schwab COO that I guess I don't need to tell the Finance Club about. Okay. So should we start with a presentation or should we start with logistics stuff?
Yeah, once you do logistics, how you got into it, how, what were you thinking? Walk us through so that, people who watch this later on will know.
Okay. Do you want to talk about like paper requirements and presentation?
Talk about the initial process.
Okay.
How were you recruited? What were they looking for? And then what did you do once you knew that you guys were going to be on the team?
Do you want to talk first?
I guess to talk to how we were recruited, we were we were all inspired by like equity analysis and research, and I think that's what drives a lot of our interests just as a group. And so that's what kind of pushed us to want to do this competition because most of it is research and equity based. And so we expressed interest to the school, and we were sponsored by our career counselor, Mary Beth, who then just kind of gave us slots on the team based on whoever had the most interest. But I think going forward, we will be interviewing and creating kind of a legacy to make our school more competitive on the field, just because it's a very it's an intense competition, and it requires a lot of like groundwork and hours to put in. So that's I guess kind of how you get in. In terms of registering, it's just an online form. Just kind of the steps we took to just kind of prepare ourselves for the project was to do a lot of qualitative research into Gap, into where the business is, kind of using models and structures such as Porter's 5 forces, SWOT analysis, kind of understanding where they lie in their strategic landscape, in addition to understanding the macroeconomic background, in addition to who their competitors are, that sort of thing. Really understanding the business in and out, and reading all the news we can about Gap to the day, and keeping up with stuff that investors are creating, as well as we have a lot of resources on campus, such as the Morningstar Investment Research, which allows us to look at other investors' input, as well as the street consensus on how Gap is doing currently.
Other things we did included reading the transcripts of the last 8 quarters of conference calls. What else did we do? We did a lot of just like facts. Oh yes, as part of the competition you get access to FactSet, which ended up being probably our primary tool of information, and it was very helpful and really intuitive, so it was really nice. It's a nice resource to have. And I think, what else did we do? We probably just, we read most of the press that has come out. We went on their website. We read about the various technological advances that they were doing. They were doing white papers on that. We would read that. What else? IBIS World, reading about the industry. So we used a mix of library resources. The CFA gives you access to FactSet, and then Google. So
I think the most important thing to understand is that you have all this information thrown at you. It's just up to us and the team to understand it and just analyze it all and put it into one cohesive narrative, which is this presentation.
Yeah, and to add to that too, Shrikar talked a lot about we built the qualitative story about Gap, and then we were lucky enough that our coach, if you were in either Professor Sousa's 135 class or his investments class, which was 137, you would have met Steve Parlett, and he was our coach, and him along with Kirk helped us build the quantitative part of the business. So we did a lot of qualitative, brought back this information, and we fed that into our quantitative analysis. So it was a real team effort. Did we cover everything, Professor Sousa? Do you have any questions? Or anyone else have any questions about logistical stuff?
Oh, and it was more of a consensus too, with Mary Beth and Kurt and myself, in basically selecting students and making recommendations. So there was that kind of behind the scenes, based on your performance in the courses and your interest in combination. And we put together a team, but the team was really originally at 5, wasn't it?
4.
4, so, and we lost 1.
Yeah.
Okay.
So, that's a good point too. The competition is usually in February, so that would mean dedicating your Jan term, and a good chunk of the second half of your first semester, the fall semester, to this, because registration starts in October. And so definitely keep that in mind. Also, you can have up to, is it 5 or 6 people? You can have up to 5 people on your team. Personally, I think if we had one more person, it would have just made it a little easier on us. I think 5 might have been too much. So 4 is like the magic number in our opinion. We managed, it was just a couple of long nights, a couple of long weeks. But we did what we had to do. And then we also have like a few requirements things, so we'll talk about later what we got as a score. But just to keep in mind, there are like paper requirements and presentation requirements. So for the future CFA students who are going to be doing this, look in the laws and in the rules and make sure you're underneath all of that, because there were a few requirements that we fudged. So that was definitely a rookie mistake on our part. But I think we're ready. If there's no more questions. No? Okay. Great. So, and then the other thing, the presentation has to be under 10 minutes, which if you're doing like lots of research and you're writing like a 10-page paper and you have like a 30-page appendix, which is what happened with us, it's like the hardest thing to get all of this under 10 minutes. So we're gonna try to replicate exactly how we did it and try to speak as fast as we did at the competition to get it under 10 minutes. So that's just a precursor. So, okay. So I would start and say welcome. My name is Marielle. My colleagues and I are here representing St. Mary's College of California. Today we will walk you through our analysis and recommendation for Gap Inc., a global provider of apparel, accessories, and footwear. Join us as we bridge the gap. So we initiate a hold recommendation for Gap Inc. with a target share price of $25.31, providing flat upside from today's closing price of $25.25. Our consensus is in line with the street's consensus. Our thesis is that Gap Inc.'s opportunities do not outweigh their risks. Their opportunities include their strong financial position, the growth of the athleisure submarket, and the continued success of their value brand, Old Navy. However, their risks include stagnant Gap brand growth, unaddressed operational inefficiencies, and changes in the retail industry, and they've created headwinds that are too big to ignore. The company was founded in 1969 and is headquartered in San Francisco. They operate through their 6 business segments: Old Navy, Gap, Banana Republic, Athleta, Intermix, and Hill City, through company-owned stores, franchises, and websites. In the last 5 years, Gap Inc. has opened 10% of their Old Navy stores, closed 8% of their Gap stores, and have opened 92 of the 157 Athleta stores. In Q3 2018, Gap Inc.'s revenues were contributed to mostly by Old Navy at 47%, followed by Gap at 32%, Banana Republic at 15%, and Athleta, Intermix, and Hill City making up that last 6%. Gap's executive management is extremely diverse. The latest executive to be brought on was Neil Fisk, who's tasked with revitalizing the Gap brand. He's known for turning around companies like Billabong and Bath & Body Works. Gap's 6 business lines position themselves competitively across a variety of price points, from value to premium, and styles from casual to workwear and athleisure. Their star performer, Old Navy, plays in the family style at a value price point. Gap's current market strategy is extremely clear. The company's future performance is dependent on the continued success of Old Navy and the growth of their 2 athleisure brands, Athleta and Hill City. Athleisure has grown at an average of 16% for the last 5 years and is projected to grow at an average of 16% for the next 3 years. However, these 2 brands make up less than 6% of the company's revenues, and their bigger segments are in the denim and casual submarkets, which do not replicate the same growth. That being said, I'm going to turn it off to my colleague Jacob, who's going to be talking about the industry and financials.
Thank you, Marielle. Performance in discretionary retail is largely driven by overall macroeconomic conditions. Currently, consumer confidence in the economy is at its highest levels since 2009. There's been a steady increase in real disposable income. More disposable income means consumers are more likely to spend on discretionary items such as clothing from Gap. In 2017, 20 companies made up 90% of the economic profits in the retail industry. The majority of these companies were either luxury or value brands, and no mid-market price retailers even made the list. Furthermore, these price points are projected to have the highest growth rates, with value at 5.5% and luxury at 5%. Currently, of Gap Inc.'s 6 brands, both Banana Republic and Gap brand are mid-market and make up 46% of the company's revenue. Thus, the pricing strategies of these brands should be a point of concern for management and investors. Efficient supply chains are essential in this highly competitive industry. Consumers expect brands to produce clothing in the latest fashion trends, which puts pressure on the manufacturers to cut their lead times while still maintaining similar product quality. For example, Zara has a 5-week average lead time, which has influenced Gap to cut their lead times to as short as 8 weeks with an average of about 11 weeks. In our initial analysis into Gap and its competitors, it shows that the company is middle of the road. While their performance isn't stellar, they aren't underperforming by any means either. For a profitability analysis, we looked at operating margin, earnings per share, net income, and EBITDA, all of which showed overall flat or negative growth rates, which raises concerns considering the favorable economic conditions that Gap Inc. is currently operating under. Gap's current cash and debt profile is representative of a conservative strategy by management. The company enjoys a modest Baa credit rating by Moody's and has more than enough cash to cover short and long-term debt obligations. Over the past 5 years, the company's consistent leverage and net zero debt puts it in a prime position for private equity exit. We believe that Gap's operational inefficiencies are the biggest issue for the company in the near future. Although asset and inventory turnover are in line with its peers, the average days of inventory on hand has increased from its 3-year average of 68 days to over 90 days. And its average discount across its brands has jumped from 38% in 2016 to 68%. This tells us that Gap has failed to calculate demand for inventory and is now pushing deep discounts to get rid of seasonal items. Now I'd like to pass off to my colleague Shrikar to talk about the valuation and risks.
Thanks, Jacob. After considering all elements of our analysis, we arrived at a 60-40 absolute and relative weighting scheme for our analysis on Gap. Our target price is $25.31, which falls within one standard deviation of a 5-year test on share price movement volatility. At about $7.13 per pound, we would have been more comfortable to issue a buy recommendation if our analysis concluded on a share price above $31.97. The first element of our analysis is a discounted cash flow. At about 4.8% cost of debt, 4.8% cost of debt and a 5.76% weighted average cost of capital, our terminal growth rate is $24.46. However, we need to account that the Fisher family owns about 36% of Gap's total intrinsic shares. So we added a 5% public market discount to knock off $1.22 to arrive at our discounted cash flow price target of $23.24. The next element is our Gordon growth. We used a predicted dividend of 97 cents with a required rate of return of 6.1%. At a 1.5% dividend growth rate, which was consistent with Gap's historical dividend growth rate, we arrived at a target price with our bull case of $27.70. Next, we thought it was really important, because of Gap's low leverage and pretty much zero net debt, we thought it was important to look at Gap from a different angle, which was a leverage buyout. Our model shows that Gap can repay its debt structure within 3 years at a maximum price of $33.22. For our relative analysis, we used a forward PE and EV to EBITDA. Our forward PE shows that with about a 2-year cash projection of a 1.5%, our fair value target price was about $18.53. In contrast, our EV to EBITDA analysis shows that our median EV to EBITDA, based on our 5 peers, is about 5.8, which pulls our fair value share price to about $28.99. It's important to note that Gap's risks are extremely middle of the road. As you can see here, there isn't any risks that's extremely high, but there are too many low to medium risks that don't initiate a buy recommendation on our part. I'd like to reiterate our bold recommendation on Gap and show that Gap's headwinds do not allow us to capitalize on a buy recommendation, and that Gap brand's revenues, operational inefficiencies, and retail industry changes don't show that we could initiate a sell recommendation either. I'd like to reiterate our hold recommendation and open the floor to any questions you may have. Thank you.
Any questions for us? Questions about research or how the competition was? I guess we can talk about what we got. So the scoring is 50% of your paper and then 50% your presentation. The paper is due, well for us, the paper was due 2 weeks before the presentation. And so for the paper, we didn't do that well, admittedly. We scored
13th out of 16 teams.
13th out of 16th, and then on the presentation we were 2nd out of 16. We did not follow paper guidelines. We didn't know them. Like, it was dumb. Like, we should have looked them up, but we didn't. And we were at 12 pages and 12 pages for the paper, 36 pages for the appendix. And the maximum is 10 pages for the paper and 30 pages for the appendix. So that's one big thing that we got docked on. Then the second thing was just, I believe, like, our valuation. They wanted more information or just didn't feel like it was as strong as they hoped. So those are two things to keep in mind. Our presentation went really well. We had really good feedback from our judges. They expressed, like, just to tell you guys, like, afterward, they came up to us and asked us, like, they were telling us basically, like, we didn't know why you guys didn't make it to the next round. I don't think they knew the grading rubric or our paper points, but just based on our presentation, we impressed them, and they're very, they like offered their business cards to us, and some of us are, I don't know if you guys are emailing them, but I've emailed them a few times. They're really nice. And then furthermore, one of the judges saw, like, we don't really know which judge, but one of the judges was pretty impressed, so they sent all of us, I don't know if it's an internship or a job. It's a job, like a job posting for post-grad, and it was just for all of us who competed in the CFA, and there was probably, there were 16 teams from 13 schools, because you compete against graduate students and undergraduate students. So there was probably about, 70 of us, and they sent us all this job posting, so it was kind of cool. Any more questions?
Why don't you walk us through the valuations?
Sure.
Do you have the Excel spreadsheets?
Do you have X? I don't have, where's your computer? Your computer has the appendix. My computer doesn't.
Is it not on the drive?
I just have.
I guess we can start with our rating scheme. We took, there are two parts, there are two styles of
I'm gonna turn this off and then show Jacob's.
valuation.
Yeah, awesome.
Because Jacob.
The first one is like an intrinsic valuation, and then the other one is a fair value share price. So the intrinsic valuation can be considered as how you model the company based on the projected cash flows. So I created a model based on all our qualitative assumptions, in addition to some of our biggest assumptions. So the submarket growth of athleisure, as Mario mentioned, had one of the biggest impacts in our model. And second, just how much little cash they had, they had a lot of cash but little debt, so that also played a big part in understanding the capital structure of the company, so that the model kind of replicates. What we don't want to do is say that historical performance shows is replicative of like what the company will do in the future. So you want to take your elements of what you believe is important from your qualitative analysis and model those projections out going forward, out maybe 5 to 10 years, and that affects all of your models, from your discounted cash flow to your growth, as well as in our case a leveraged buyout, which none of the other teams
That's it, yeah, another comment that we got.
did during our presentation, and so.
Then we did like a relative valuation thing with PE and EV to EBITDA.
Yeah, that's correct.
We just have 5. Yeah, we have 5
Yeah.
models. DCF, forward growth, LBO, EV to EBITDA, and PE.
outside of the intrinsic valuation is the fair value share price. Is so you want to look at all the company's peers. In this case, we took 5, and one of the feedback was 5 peers was a little low. Maybe a couple more peers were 10 to 15, depending on, to get a really solid gamut of where the industry is at this time. And then take a comparable of all their core metrics or ratios. In this case, we did price to earnings as well as enterprise value to EBITDA, which is really important. And so you want to pull up the DCF first. And so here's our DCF breakdown. So what we did is we calculated a weighted average cost of capital based on assumptions. Some of these assumptions are their current equity value, their current debt. We used like last 12 months, trailing 12 months debt because that affected our weighted average cost of capital. If we were to use 0 net debt, our WACC would have been too high. Anyway, so we calculated weighted average cost of capital. We took a terminal growth rate and then pumped out the sensitivity just based on the NPVs of all the enterprise values, which are up above. And here are our projections for our cash flows going out 5 years up to 2023. And it's really important that in your DCF, if your assumptions are trash, then your DCF will be trash. So you want to keep it as realistic as you feel that your qualitative assumptions can pull out on your projections. And so after doing all that, we arrived at our discount rate and then our intrinsic share price, which was considered absolute in this case, $24.46.
You can go to the next valuation. Go to, Gordon Gross, maybe that's the next one.
Yeah, I mean, standard Gordon growth stuff, you got your CAPM, your dividends. We did project like various cases based on how we thought it would perform. We did fair, base, and bull, and we chose the bull because of GAAP is historically a very high performer of dividends, so we chose the highest one for that. Yeah. Yeah, but
I mean, really simple. A leveraged buyout is a private equity exit takes on the debt of the company and then pays a multiple premium and then pays down that debt over however many years. And because of GAP's already consistent low leverage, we were allowed to take on like an implied 5 times EBITDA multiple, but then our debt puts it like, because of 0 debt, you could, I guess at this point, GAAP could pay down its debt right now. I know the company's splitting, but which is why 3 years is a very aggressive estimate, I would say, which is why our LBO model put our share price a little high.
We also weighted this section of our valuation at 60% and weighted the multiple section at 40%, and the reason being, I mean, some things that they talked about, which were like DCF kind of folds a lot of qualitative assumptions into a quantitative analysis. LBO we thought was super important, just because with GAP's balance sheet it made sense, and then Gordon Growth, I mean, their dividends were pretty consistently high. I think they were at 30% premium for like 5 years to their peers on dividends. So it made more sense to weight this amount higher than to weight the multiple analysis, which I did. If you can go to EBITDA. Yeah, so this is the EBITDA analysis. We pulled a lot of the numbers from FactSet because they had them, luckily, and then took the median EV to EBITDA of the whole peer group rather than just GAPs, and found a multiple based on that, subtracted GAP's debt, added their cash, found an equity value, divided it by their current diluted shares outstanding, and got a fair value share price of $28.99. And then we did a PE analysis, which I messed up, disclosure. later. And it was part of the notes in the thing was that they noticed that it was messed up. So take full responsibility for that. But what did I do that was wrong? Oh, stupid rookie mistake. I tried to forecast the future price of the share, which thinking back, I'm like, why did I do that? But whatever. So it kind of like, I mean, it pushed it up by like a few cents, but they still noticed and took points away from it. So if you notice, I like did that and it screwed it up, and then shares outstanding, you can't predict the number of shares I want to have, and keeping it steady makes no sense either, but that's what I did, and I fucked up, but it's fine. Yeah, and then I guess now we can talk about the future of Gap. So we did this analysis. It was actually one of the issues that we had was the fact that Gap and other retail companies, they're on a 13-week schedule rather than the classic Q1, Q2, Q3, and Q4. So what ends up happening is they don't report until like a month after most companies do. So while we were doing the analysis, the latest quarter that we had was Q3 2018, whereas had we started with like, I don't know, a different company that does the classic quarterly schedule, then we might have had better numbers, or more accurate numbers.
Full 2018.
And a full year's worth. So what we ended up having to do is do a trailing 12 months thing, which some places had and some places didn't, so that was one of the issues. And then, of course, 2 days after the presentation, Gap comes out, the actual company comes out with their earnings for the year and announces that they're splitting the company up. So none of us could have seen that one coming, but I would say that had we presented probably after that, they would have weighted us a little bit higher because we had a leveraged buyout model and no one else did. So we're proud of that. But yeah, what did you guys have a hard time with? No hard times? Just me?
No, all of it.
I was struggling. I mean,
Sure.
it was like a learning curve like this. It was, but
It's definitely
I can
better.
say now that I learned a ton and that I can talk about the stuff and feel pretty comfortable standing up here and explaining myself. So that's definitely positive. All of it. It was hard, but I mean, it was a good. I think we all agree it was a good experience.
I think the biggest takeaway is being able to model these things accurately. To Marielle's point, now that she, stumbled a little bit, she can do this accurately now later on, right? So just being able to level up as a finance and econ major is really important, and being able to kind of synthesize the information faster is one of the biggest takeaways for me, because once I read an article, I need to be able to implement that in my model if I determine if it's important enough to put in the model in the first place. So
I think also going to that point, if you start when you're supposed to start, which is in October, you won't have as hard of a time. Because we ended up, honestly, ended up doing all of the work in January, and it was with one less person than we thought we were going to have, and it was a lot of work. But if you are interested, which I hope you guys are, because it's actually really fun, and then when you get to competitions, it's kind of adrenaline, it's really fun, everyone's there, and they give you free food, if that helps anything. It is really rewarding, and you get a little bit of a confidence boost from it, so I'm really hoping some of you guys are interested already, and that you'll make sure to reach out to Kirk, who I think is going to be advisor next year, right? Pretty early on, saying that you want to do it, and start in October.
That's the donuts.
It won't be too bad. I swear. No, it really won't. It really won't. It was just time constraint.
I mean, if you need an extra cell, there's a lot of opportunities that come out of this. Is everyone who was at the competition was either a CFA charter holder or a level 2 CFA exam. They passed, which means that their career trajectory is on the rise. That it's very much like this, and so networking with them and talking to them, if they're impressed with the work you do, they can very well offer you a job on the spot. So saw that happening a little bit. It's definitely it's a great way to add your career, and case competitions are a great way to learn to speak in front of people, and because as a business student you really need that skill, presenting to talk to people and get jobs when you have them. So take opportunity.
How did you
you guys decide on Gap? Like which company?
Oh,
Because
that's a
I
good
feel like that would be
question.
the most difficult part, and if you pick the wrong thing, it sounds like there's a lot that can go wrong.
So we don't get to choose the company.
Oh, really?
We should have probably said that.
Yeah.
Yeah, we don't get to choose.
The competition chooses a company, and all 16 teams in this case kind of present that
Wow.
company on their analysis. And it was really important that so at the final round they chose all different recommendations. So even though we had a hold, some teams had a buy, some teams had a sell. You want to place yourself strategically based on the recommendation that you have to make to the final round, as well as have a succinct presentation, obviously. So there was one hold, one buy, and one sell recommendation, and the hold recommendation, which were a bunch of MBAs from SJS.
Were they MBAs?
They were MBAs.
No, they looked like they were our age.
No.
Really? Well,
She was
I
like-
was going to say, don't get intimidated by the MBAs. I was super intimidated, but I should have. Yeah,
Right.
we would have never even known like who was.
How it works is if you win it, the NorCal region, you do West Coast, and then you do nationals, which is all of the United States, and then you go internationals, which is amazing.
Yeah.
Keep going.
But even just this is nice on the resume. And it's just a good talking point to bring up in an interview.
It's probably just a detailed thing that ties to that question that was just asked about the company. They changed the procedure this year. I believe in the past that the people in charge would tell you what company you were going to analyze. And then this year, I believe they allowed the contestants. You guys were a little bit behind that curve. Timeline.
Oh.
They allowed the contestants to basically vote or decide.
And we
to-
just
I mean,
Well, there you go.
whatever. I didn't. Okay, we didn't know that. Oh, we also had a company call with the head of investor relations. So when you're like high up in managing people's money and stuff, you might get the chance to speak to like, I don't know, sometimes the CEO, sometimes the VP of finance or something. We were pretty dang close to that with the head of investor relations. And when you listen to the conference calls that the company does, it's usually moderated by the head of investor relations. So it really does feel like you're working for a company, you're managing people's money, and you're trying to figure out whether or not to buy the company for these.
So another detail related to that, maybe you understand this. Companies are only allowed to say certain things, and there's certain things they cannot say, because they don't want a certain subset of the population to hear things that somebody else doesn't know. That's why they have investor relations, because they have regulations about what they're allowed to say and not allowed to say. So it's great that you get to talk to them, but you have to remember that they're very, very careful about what they're going to tell you.
But we did
those
get-
rules don't account for Tesla. They're on the, he's got his own.
if you're Elon, you should
But
say.
Hey,
I mean, to a point, we did get to turn in questions that we wanted to know, and the moderator picked one of our questions and
Not
asked.
really.
Well,
it's still
he got
illegal.
to the point.
I guess to give a
He
little.
did get to something that we asked.
Sure. I'd love to give a little context. In our first,
He did go.
I guess I strongly believe this opinion is shared by the group that that investor relations call was not helpful.
Yeah.
You're able to dive. So I guess a skill to learn as well in this competition is to understand what the IR person doesn't want you to know.
Right.
Wait, but Jacob brings up a good point. We know why. It's because they were going to split the company.
Well, yeah, there it is, but,
rock the boat.
Eventually, the news will come out. It's how to dissect the information is what's important.
Anyway,
Go ahead.
it was still a good experience. Are any of you guys really like excited and are thinking about doing this next year? You are, definitely. You, yeah. I hope so. Are you? Maybe. Definitely.
You guys are incredible presenters, by the way. Like, I was super impressed by all three of you. I
Thank
kept on
you.
thinking, like, you went, and I was like, there's no way they're going to be as good as her. And then you went, and I was like, oh, that was great. Good luck, buddy. And then you were just like, great, too.
Well, maybe we should talk about us preparing for this.
Oh yeah,
'Cause-
and so our last week before the presentation, we maybe practiced 20, 30 times.
Hours.
Yeah.
And to the late nights and to mornings, and we would stand in front of the mirror and we would just talk over and over and over and over and over again. We prepped the morning of, like before we presented, we were practicing on a different floor, like a long time.
Yeah.
So thank you. But we
We also didn't
worked
get
really hard.
under 10 minutes until that
The day of.
The day of.
And when,
We didn't get
where were you rated on your presentation? I forgot.
Second.
Oh, yeah, that's right.
I believe.
Our so this presentation was is maybe a month and a half behind, so we've actually haven't practiced as much. But on the day of,
We were on it.
we were definitely on
Yeah.
it.
So,
we were on it.
again, a detail, but I wasn't supposed to, but somebody wasn't there on time, and I was the timer for one of the first presentations.
Right.
I think I told you this, they obviously didn't practice, because they have 10 minutes. They hadn't even gotten to evaluation, and their 10 minutes was on.
I was going to ask you, do you know if they moved on to the next?
You know what, I wanted to know, I don't have the facts on that, I wish I did.
Do you
I
remember
assume
do you
they-
remember the team?
I don't, I
Oh,
probably
well,
should
okay.
have.
Is it like recorded or something?
No.
I should have, I might see if I can find out, but
Another point.
But they're very
actually,
strict on time.
Was
Is it just a panel of judges, or are you
Yeah.
presenting to all the other people who did the project as well?
How it works is you first present to just a panel of judges, and if they decide, if they score you high enough and you do well, you move on to a second round, which is where you present in front of everybody. That's how most case competitions work.
And then as a point to our presentation, which we think we worked really hard on and it's beautiful, I'm really proud of it. This took a lot of hours too. Shrikar and I created these images, on vector thingies, and we decided on, we fought over color scheme,
Oh yeah.
everything. Everything you think you can fight about, we fought over.
Do you want to go to the
whether or not
bag?
to what?
The bag.
The bag at the
Oh.
bottom. I think it's so cute.
Yeah.
Oh, see? She thought it was cute.
It's like the shopping bag.
Which
Yeah,
one?
I fought really hard for this shopping bag to show up and move across
oh, that's
Yeah.
fine.
where is it?
So like
Is it supposed to
There's a-
follow the chart of the
Oh,
case?
yeah.
or-
Yeah.
So
so-
company, see, she really liked
when you
it.
do case
I
comp
noticed it
presentations,
immediately.
Industry.
there's a few little tips and stuff you can do to keep your judges focused, to know where they are. And one of them is this timeline. If you look at examples of case comp presentations, there'll be all sorts of things. I once saw a target presentation where there was a target bullseye, the target logo kind of moving with the
Okay.
elements of the analysis. And this gives you judges kind of an outline of where you're going to go and where you are and where you go next.
Cool.
Right?
Yep.
So all sorts of things.
Color scheme, we fought over, like I said.
We fight over the font and text
Everything.
and
Everything.
yeah.
So I'm gonna be a little bit pointed, but what was the main thing that you learned as you were learning how to do the presentation?
Just the least amount of information you can put on the
Wait,
slide.
what do you mean, physical presentation?
Just, yeah, what thing would you say was the most, maybe the biggest surprise to you that works and you didn't think of that, or?
I think what your car said, less information on the page and really visually impactful. This is a visually impactful slide because you can see the positives and the negatives and as I'm speaking,
Yeah.
correlates and
Could you go
this
to
is my
one more,
favorite slide.
the valuation, I think, where you show how it brackets into the price?
Right.
That one?
Right.
Yeah,
Could you
yeah.
go to that?
That's-
Don't you think that was useful to change it like that?
Super useful, super useful. Yeah, we used to have
This one?
each slide that you see
had a ton more.
had a ton of iterations, and so
Will next year's team have access to looking at this presentation? For
Yeah.
Yeah.
We'll leave our paper. Is anyone interested in having a copy of our paper? Read it if you want.
Bless you.
Sure.
Yeah. We'll leave our paper and we'll leave our presentation for the next years and the years to come, and hopefully you guys can win next year. It's good experience.
And one more detail, you can look on the CFA Institute website, and they put up the winners from prior years.
They do.
You can look at their presentations if you want.
Yeah, we used a lot of that too as kind of not guidelines, but kind of just trying to see where we match up to everyone else. Yeah, there's some really cool presentations out there. So. Okay, any more questions? No? Okay, thank you.
Thank you. What are you guys doing on graduation?
Go ahead.
no, go
I
ahead.
know where I'll go first.
Come on,
No,
Mario.
go, Shrikar. Let's have the student of the month speak first.
No,
Student of the month.
no.
No, it doesn't matter, just say it.
I'm going to Microsoft.
Oh, that's awesome.
But Marielle is going to take your lead.
Which one?
I'm going to KPMG.
Oh, that's awesome.
Are you gonna have anything to do with valuation?
No, mine was risk management and consult, yeah.
Okay.
it's Shrikar who's gonna
But
be
No.
doing this, probably, more.
I think they have work on that, don't they? Somewhere?
Yeah,
She's
but
the-
the
she's
team
the
I
hot
wanna
shot.
be part of probably,
real hot shot.
I won't be doing that.
That's okay, but you could just keep an eye on it and see if it's interesting.
Totally. Thank you, Professor Souza and Liz. Any more questions? No? No? Okay. Sorry. There's the grad fair is today for seniors, and I need to run over there.
Thank you for having me.
Yeah, of course. Hi, everyone. Are you going, Sam? Grad fair? How was it?
We just kind of talk to people.
Okay. Was it helpful?
Yep. We can talk to caterers and different services.
Yeah, I need to talk to.
That's all I talk to.
Okay, cool. Thanks for going, Sam.
Yeah.